Hello everybody, it's Tortoise Investing coming at you today with two stocks that are down 16 and 17%. We are talking about Starbucks down almost 16% and CVS down almost 17%. Yesterday was an absolute roller coaster of a day. We had ups, we had downs, and then we finished down 0.3%. Jay Powell came out and spoke, and he wasn't as harsh as we thought he would be. So, a lot of things to talk about. Hit that subscribe button for me. I greatly appreciate it. Drop a like down below and let me know in the comments, are you buying any of these today? Are you looking at making any purchases? Now, none of this financial advice. Always do your own research before buying anything. Let's go. So, yeah, the market did this big swing thing. So at one point we were up 1.19%, and then I guess what goes up must come down 1.38%. So big swing there. I didn't know what to expect. Like, we started the day in the red, and then we were green, and then we finished in the red, all over the place. But Starbucks, oh my goodness. Long predicted consumer pullback finally hits restaurants like Starbucks, KFC, and McDonald's, and pretty much Starbucks was down across the board. Pretty much everywhere and everything. Memberships were down. Everything you could think of was down with this company. Now, take a look here to date, down 20.53%. Take a look here at the 1 year, 28.4%. We had a spike here, 107, back in November 2023. Take a look here at the annual revenue growth, 9.22% revenue growth. Free cash flow, 7.66% over the last 10 years. We got a dividend yield of 2.58%, payout ratio just below 59%. EPS growth is looking pretty solid, but analysts are now expecting this to be slower, like mid-single digit slow. And when they were predicting, I think at one point it was like 11% or something with their EPS growth. For cash to debt ratio, something they usually always manage pretty well. My personal rule of thumb is I don't like companies that have more than 3 times their EBITDA in debt, and Starbucks usually does a good job at maintaining their financials. Now the dividend here as of late has been growing a little bit slower at a rate around 7 to 8%, but still inflationary, beating dividend growth, which one of your companies, and that return on capital employed has been also very nice, continuously growing since 2020, 21 going up to 24, and then 29% ROC. So we take a look here at the quarterly basis. It looks like they have been nibbling here and there at some shares. Hopefully they take advantage of this big drop and they are just gobbling up those shares left and right. They'll absolutely help their EPS in the long term. But yeah, Starbucks, do your own research, see what you think about it. But this is, I think it's a great opportunity. It hasn't been this low since May 2022, and then the COVID dip. Next up, CVS, 16.8% down. CVS plummet after health company slashes profit outlook on higher medical costs. Now, the first quarter revenue and adjusted earnings missed expectations. So we take a look here at CVS. Year to date down 30% over last year, 19.6%. It's been a little bit of a roller coaster. Up, down, up, down, up, down, up, down. Just all over the place over the last 5 years. Basically flat. And at one point we were hovering almost $110 back in January 2022. Take a look here at the revenue. Over the last 10 years, rate of 10.93%. This is something that they're expecting to be flat or slight miss or slight gain going forward. I think it's the same thing with their free cash flow. Over the last 10 years, 10.59%. But again, I'm thinking they're expecting this to be pretty flat. EPS, 5.63%. So slightly up and to the right. Looks like, again, kind of flattening out here. Debt, 56 billion. EBITDA is 19 billion. So again, not a concern. It's getting there. Dividend, they had paused this for a while and started increasing again. They've been doing hikes around 6 to 9%. So, mid to upper single digits with those dividend hikes. And shares outstanding, we'll take a look at that. It looks like they are nibbling at some shares here and there. But yeah, the consensus, there's not a lot of growth when it comes to revenue. And if you notice here, between the low and high estimates, there's a pretty big gap. And usually if there's a pretty big gap, they're not 100% sure what's going on. Now, if we were to look at this and it be, like 6.8, 7, 7.2 or whatever, it's, in the same area, it means it's a pretty good estimate. But for this, it's looking like they don't really know where EPS is going. And again, same thing with revenue. I don't know what to expect of this, especially if medical companies, healthcare companies, stuff have really been struggling as of late. But these are two to definitely keep your eyes on. Especially if you've been looking to buy a position at Starbucks. If you're a believer, your thesis is the same. Now would be a great opportunity. Again, not financial advice, always here in research. And I feel the same with CVS. If you are long-term with it, if you are a believer in it, back here in the 70s, you should absolutely be eating it up at 56. But that's everything I got for you. Hope you enjoyed that. Make sure to hit that like and subscribe button for more. Until next time, take care. See yous.